How do assessed value and tax rate determine my property taxes? Imagine you're trying to figure out how much you'll pay in property taxes this year. It all comes down to two main things: the assessed value of your property and the tax rate set by your local government. Let's break down how these two pieces work together to determine your bill. First, the assessed value is an official estimate of what your property is worth for tax purposes. A local assessor looks at your home and considers factors like recent sales of similar homes nearby and the condition of your property. But this assessed value isn't always the full market value. Usually, it's a percentage of it, called the assessment ratio. For example, if your home's market value is $500,000 and the assessment ratio is 60%, your assessed value would be $300,000. The ratio can change depending on where you live and what kind of property you own. Next, the tax rate is set by local authorities such as city councils or county commissions. It's often expressed as a percentage or in mils. 1 mil equals $1 of tax for every $1,000 of assessed value. So, if the tax rate is 10 mils, you pay $10 in taxes for every $1,000 of assessed value. If your assessed value is $300,000 and the tax rate is 10 mils, your property tax would be $3,000. You get this by dividing the assessed value by 1,000 and then multiplying by the mil rate. Sometimes there are adjustments. Some areas apply extra factors like equalization multipliers to make sure taxes are fair across different regions. You might also qualify for exemptions, like if you are a senior or veteran, which can lower your taxable assessed value. Some places tax only part of your assessed value, which can also reduce your bill. In the end, your property tax depends on how much your property is valued and what your local government charges per assessed dollar. If your assessed value goes up or the tax rate increases, your bill will go up too. Conversely, if you qualify for exemptions or the assessed value is lower, your taxes will decrease. Keeping track of your assessed value and understanding your local tax rate helps you plan for what you owe each year.